All right, so this is going to be a quick video talking about the importance of everything that we have in the upcoming week for the stock market. Now, last week, the market did relatively good with a few exceptions, but for this upcoming week, there's a few things to note. And a lot of this stems from us being in the middle of an earnings season. So right now we have a lot of large companies reporting this upcoming week. So we have companies like Microsoft, Google, Facebook, Apple, Amazon, and to finish with the end of the week, we have Exxon and Chevron. Now, these are a lot of large companies holding the S&P. So if anything happens, this could make a major shift. And another thing to note is that we have the FOMC meeting where the Fed will likely discuss what's going to be happening with the federal interest rate hikes. Now, it's predicted that there will be a 0.75 increase or a 75 basis point increase. But remember, the Fed's primary goal is to cut inflation. And since this came out with the CPI at a 9.1% last month, it doesn't seem that Fed will be decreasing this rate hike anytime soon. So there's a few things to do if you're trying to play any stocks this week. Now, of course, you have to know that we're in the middle of an earnings season, so a lot of big swings will happen. Now, two large companies that I plan on trying to make a play for this week will be Google and Intel. Now, for Google, Snapchat released last week and they got hit pretty hard. But what we saw from Snapchat is that they're not able to handle the advertisement and the marketing cuts. So Google might likely be able to increase or at least hold their profit margin on that front. And for Intel, their CEO has been making the rounds talking about the CHIPS Act. And if there is any pass or movement this week for it, they might have a run along with Qualcomm. Now, these are just two companies I'm keeping my eye on. But if you have any, let me know down in the comments below. And if you enjoyed the video, like or subscribe for more content like this.